Greeting guys and welcome to my YouTube channel, nenomaila Mtraders. You already know. So on today's video, I'm actually going to talk about things you should never do when trading these synthetics pairs indices actually. So before we go into the video, can you please like and subscribe and hit the notification bell?
Make me hustle every day. We chasing people. At about that you want. Make me hustle every day.
So yeah, the most thing that I see people doing wrong on trading synthetics actually is that they analyzing, they don't go to these bigger time frames. They're starting on a 15 minutes. On a 15 minute, they will draw this trend over here. Overall, if you're trading from a bigger time frame, you know that the market, let me just do an example. Let's say they doing this, né? They doing this right, they doing this over something like this. Then when this market breaks, they believe that it's gonna come to this level. Then they would have their stop loss where, let me just show you, they would have their stop loss where, let me just do this. Stop loss over the double top over here, then they would target this area over here. So because of they don't know the real trend, they would think the market is obviously done trading up, done being in an uptrend. So overall, that's one of the bad things about analyzing from a 15-minute time frame. So stay away from the 15 minute if you haven't went to the the daily or the 4-hour chart time frame. So if you lazy to go to, or if you don't prefer going to the daily, rather start on a 4-hour if you want to scalp. So what I do, let's start on a 4-hour. Okay, let me just do this. So overall, you see, they would have it would have broke out, then it went down, and they would have thought it's coming back to the test, then it would have hit their stop loss and continue going up. Overall, they were targeting this area over here. So it's actually very, some are very good cause, and some would take profit with these levels over here. There are those who are good trading from 15 minutes, and there are those who actually rather know what you are doing, guys. If you know what you are doing, why are you targeting this area over here, doing that? You're supposed to be focusing. If you're scalping, I would rather focus here on the previous two touches. That would be my take profit to the previous two touches. So my take profit would be here. But then look how big the stop loss is. The stop loss is too big, because then you'd have it here, somewhere here. So sorry, you'd have it somewhere here. So actually, let me just, I can't really see a thing over here. Okay, it's better than, okay, we have this. So overall, as a good trader, you take your take profit on the targeting your previous two lows that you coming from. So overall, you would have taken your TP here. So the risk ratio would be 1:3. I mean 1:1,3. So it's actually good. It's not really bad. So let me show you the benefits of a bigger time frame, and we'll talk more about what they're doing wrong. But now let me just show you the benefits of the 4-hour at least. Let's say you're starting on a 4-hour. 4-hour. Okay. Remove. Okay, here's our 4 hour, right? We can see overall we were in this uptrend over here. Our higher high, higher low, higher high, higher low, higher high, higher low. Then the market broke this level, but then overall we're still in this uptrend because it it didn't create another low outside, or it didn't retest. So you'd be it's very early to enter for entry. That's why you're supposed to be waiting most of the time. So it continued upwards, then it gave us this double top over here, then it broke both. It broke both our neckline and also our resistance, our previous our support, our previous resistance. So what do we do now? That's when you can focus on more buying opportunities. So let me just delete everything. Delete all. Okay, let me just do this. Remove all. So we have our double top, or you can call it a triple top. You can now you have studied the bigger time frame. You know that you have a bigger time frame. You have a double top on the bigger time frame, or you can call it a triple top. So you go to the to your 1 hour time frame. So on your 1 hour time frame, you actually want to mark out where you wanna take your TP, because the market might just be coming to this level to mitigate, or to let me say fetch orders. If you're trading with uh ICT or SMC, I don't actually use ICT and SMC, but then I know the basics of it. So overall we have this. So the market might be coming to this level over here. Let me just do this level over here. Let me just use the line graph. Over here we have, okay, it might be coming to give us a third touch over here, then it might be going up, but then we don't know. We're taking the message from the market. So we just trading, it's actually probabilities. So we're trading our probabilities. What we've seen work many times, that's what we're trading using. So we have another here's our neckline over here. Previous, it was once a resistant, then it broke it, it started being a support, then it broke it. So the market might be coming here, then retest this level, then yeah, for now we know that the market is it's trending down. So let's say you want to scalp this, you go to your 15 minutes. Overall we saw this triple top or double top, but in, let's call it a triple top. So we have a triple top being breaking our support. So we go to our 15 minutes for entry. Our 15 minutes, we own our 15 minutes. So our 1 hour ended somewhere here. Somewhere here. Sorry. Somewhere here on around 10. Okay. 10 a.m. That's when the market was breaking on our hourly chart. So we wait for this break of structure. So we're entering right after this candlestick over here. Right after this candlestick over here, targeting which level? This level. It's actually a live market, so you can see overall. I'm not talking about something that I don't do. It's something that you can see actually. So you can see that the market is coming to this level that I told you about, to give us a third touch over here. Hence we have our first touch over here, our second touch. So you're scalping. Now you know the direction. So you can actually be selling every break of structure. Even here, overall, when you got your triple top, triple first top, second top, and third top, first touch, second touch, and third touch. Overall, you had this structure, beautiful, bearish structure over here. So, and you had what the you have this, what you call it, a bearish engulfing candlestick. So we have a bearish engulfing candlestick, and we have this beautiful bearish structure. So overall I would have entered right after the break, then targeting this area over here, then that's why I exit. Then after the break I would have entered here. So today actually I didn't open this trades, but in overall if I wanted to trade I would have entered here and also entered here. So this is my first trade of the, this would be the first trade of today, yeah, of today. Then this would be overall, sorry, overall I will be targeting this level over here, then my TP, my SO will be over this SL over here. That's why I was telling you I actually scope this pairs, but in knowing the market conditions of the bigger time frames. So actually we come into which level to give the market a third touch here, or we might actually break. Then that's when you wait for a breakout and retest, and you target which level, this level over here. Then you, after that level is broken, you target another level over here. So you don't, you follow what the market is giving you. You're not actually creating yourself opportunities, you're taking opportunities from the market. So that's how I actually trade this synthetic pairs, this synthetic indices. So I hope you learn something from this video and grasp something, and you find value in it. And yeah, keep on practicing and keep on mastering the skill. Focus more on the skill, the money will follow. Mtraders, you already know, we learn from our mistakes and our losses, we build from our profits and what we have learned.
We chasing people, everybody like you, very hustle.